Okay guys, welcome back to another Forex video. Today's video is kind of like the video I made before on how to catch 100 pips per day in your trading, and today is going to be a one-up from that. I'm going to show you how to catch 500 plus pips per day trading Forex. And this probably seems like a clickbait video where I show you some way to make loads of money, but this is real. Like, I've done this in front of people for free, and this trade which I'm going to show you, which I took, which you could have replicated pretty easily, I actually mentioned in my previous video. But more likely I'm looking for gold to start selling off again as we go into next week. As you see, very bearish move here after we had that impulsive move to the upside. I called it to the pip, and if you followed that, then you would be up around 800 pips currently. But yeah, I'll quickly go onto the charts now to basically tell you how you could have actually taken this trade. The pair we're going to be using for this strategy is actually gold. If you trade gold or if you trade Forex, you probably know that gold actually is very, very volatile. It does like to move a lot. Let's start with the basics on how to do a top-down analysis first. So we're here on the daily time frame. You see here, nice support area, and this support area has actually held very well. As you see, September here, 4 rejections on the daily. Coming into end of October here, another rejection. November, more rejections. So this support was holding very well. And obviously we had another area around here which price managed to break above, and then impulsive move from gold downwards. But if we actually move on to the 4 hour now, what we see is in more detail on this support area. As you see, we had a nice indecisive reversal candle here, and then gold actually pushed 220 pips to the upside. So this support was a good area of reversal after a bearish move. You'd see a bullish impulsive move afterwards. And as you see, price was ranging around this point, because although we did have this breakout up here, price wasn't actually able to hold for a long period of time above this area. And with the vaccine news that was coming out the past few weeks, and also the election news, gold actually plummeted down back to this support around 1,000 pips on this one move here. If we go down to the 1 hour now and we remove everything, knowing that this support was down here, what we can now see is a form of resistance around this area here. So if you watched my previous video, I was talking about what is going to happen with gold. I said the price, when price was here, I said it was going to fall, retest this area up here, and it did to the pip, and then look what happened. I mean, if that's not enough reason to obviously follow my trades, then I don't know what's happening here, because I called this in front of thousands and thousands of people that watch my videos. But you know, if you entered on this rejection of this resistance, which I said it was going to sell from, you would have been 750 pips in profit. And one of the most simple strategies I use is the break and retest strategy. So what we had here was a break of this support, which is now a resistance because it prices below the area of support. So yeah, this is now a resistance area, so we know that price can come back to retest it, and if it does reject this area, then we can look for short positions. So what we had here was a rejection. Price came back down, rejected it again, and you could mention this as a double top. As you see here, we came to the same area twice. So our confirmations were a break, retest. We had a very bearish candle here after this bullish push up to this resistance. We had a double top, and even if you didn't enter up here, even if you entered after this bearish engulfing candle, you still would have made a good 700 pips profit. So let's look at the risk to reward and how you would have set up this trade with your take profit and your stop loss. So we enter here, and stop loss, we have it above the previous highs. So as you see, the highs are there. Let's put it a little bit above, around a 54 pip stop loss. So not massive for gold. And if we target, where would we target? So target 1 would obviously be these lows here. So I'll take profit 1. If we just mark that on with that line there, that's our TP1, around 220 pips. So that was smashed in this one candle. After this move down, pull back, another move down with this huge bearish candle. Take profit 2, where would that be? So now we have to look into the past to where price has actually been rejecting before. And actually, as you see, we could target these highs that were previously tested as an area of resistance before it broke through back in July. So what we need to do is have this area drawn out. So that is our next take profit. Obviously these are very large take profits, and this trade wouldn't have just been enter an hour later close. It would have been a longer term trade, a few days, and you could even still be in it. And as you see, take profit 2, 600 pips, and the trade is already a 1 to 11 risk to reward, and you would have had 0 drawdown pretty much, or maybe a pip or 2 drawdown. So if you're risking 1% on your account, you would be up 11% currently in this trade if you closed out here. But yeah, this area which I showed you was rejected in the past as a resistance, broke through, and now is retesting it as a resistance once again. So these key levels on gold and many other pairs love to be tested multiple times. They hold very well, as you see, breakthrough, retest, retest, and now we might see another bearish move down. But if you did hold gold past this area, then I'd say the next sort of area you could target is actually these lows down here. As when you see here in the past, price was actually consolidating and ranging in this area. So if we put the last take profit at the low of this consolidation, then what we see is price is kind of doing the same as what it did in July. We had this resistance at the top, and then we have a ranging market here. So now if we see a push down to this take profit here, it would have been an 810 pip trade, and you would have managed to catch 14.8% on your account. So say that is a £100,000 account and you risked 1%, so you risked £1,000, then you'd be up £14,800 on this trade. This is a very simple strategy. Just look for multiple confluences after a break of a key level. As you see, key level here, we broke it, we retested it. We had a bearish hammer candle, we had a retest, we had a bearish engulfing candle. I mean, if there's not any more signs to enter a short position, then I don't know what else you need to actually enter this, because I've seen my multiple signs which I want to see for a trade, and I did actually call this in front of many people, as you saw in my last video. So if you do want to follow more of my trades, join my VIP Telegram, link is in the description to my Instagram. There's more info on there. My website is coming soon, so look out for that in the future. But yeah, the next video is going to be a 10 to £1,000 challenge, and as you see, gold's made some big moves and I've made some big profits. So if you're looking forward to that, smash the like button. Also got a video coming on my different sources of income, so be sure to look out for that too. But yeah, that is all we got time for this video. I just showed you a simple strategy which basically anyone can do. If you know how to draw key levels, you know how to identify different candlestick patterns, and I've taught you how to do this with a top-down analysis, how to go from the daily to the 1 hour to catch 500 plus pips. As you see, this was a 750 pip trade sent out for free on my YouTube. So if you want more of this, get the paid version in my Telegram. I'll see you in the next video.